What's up, traders? I hope you all having an awesome weekend. So it was a nice week again. In fact, it was a nice month. We've been taking some nice badass trade from last whole month, and I hope you have learned something out of the priority group. So this weekend, I want to show you some trades we have been taking in the priority group. Just to let you know, this group is not just a signal group. This group is for you to understand and for you to learn the way you enter the trade. You look at the entry patterns and all the other confluences in order to take a valid entry. So this week, I see a nice condition there in natural gas. That is why I want to show you some trade, and I also want to teach you the way you enter these type of conditions, these double tops and double bottoms, as we are getting some nice condition there in natural gas. And by looking at these trades, you will have a really good idea of how to enter the trades when you have these type of conditions. And we have exactly the same conditions we've been learning in the priority group. Again, priority group is free if you join one of my partner broker, but if you are paying for the priority group, you are not paying for the signals, you are paying for the education. That is why I do not support signal services. I want you guys to learn and become an independent trader. Of course, you can't learn 100% in the priority groups, but it will help you to understand trading in a most accurate manner. So if you want to skip this part of the video, I'll put the timestamp up there. But if you want to watch the first part of the video, I promise you it will be really, really helpful for you. So let's start with this trade here. So this was a pain in the ass trade. As you can see, we entered this double top trade. It came back up, almost hitting our stop loss. It was around 6 to 7 pips near to my stop loss before we had a nice fall. And here, all you need is a discipline and patience. And imagine when you had a relief once the market pushed down, came back to your entry point, and imagine you exit your trade just with a fear that market will reverse from here, but instead it pushes down. That is why once you enter the trade, once you hit a buy or sell button, make sure you wait until the market hit your stop loss or hit your take profit. In this case, you see the patience paid off, and we had some nice 149 pips to actually this was a shorter target, but I have managed my position personally. But initially it was 65 pips position, and then I managed it until here. So this was a nice double top entry. So let me show you another trade we have taken in the priority group. Right here, this was a trade we have taken with a nice engulfing pattern in the zone, and the other confluences you learn in the priority group. As you can see, market hit or take profit and then falls back down. Another trade which is US against Canadian dollar, and as you can see, this trade I've sent in the priority group and we had some nice badass pips. And then we took this trade in our Telegram channel. As you can see, this was one of the pullback entry you learn. This is the most common signal you see out there in the signal groups. And let me ask you a question. Do you have any idea the person who is sending these signals, why is he taking an entry? And what is he looking at when he's sending the signal? Do you have any idea if this person who's asking you to pay for the signal services, is he qualified enough to send you these signals? That is why I show you the screenshots of these entry. That is why I show you the candlestick pattern. That is why I teach you the entries, the pullback entries, why I'm entering the trade, so that you learn it yourself and not following any buy or sell signal blindly. Let me show you one more trade I've taken personally. I have not sent this trade in priority group right here. So now, my reason for sending these trade alerts with the entry pattern, with all the instruction, is because so that you go and look for the similar patterns in the other currency pairs. That is why I say it's not a signal group. So what do you see here? We have a market pushed up in the major zone. We have a nice double top pattern and then market pushed up. This was a trade I've taken as 126 pips profit. So that is why do not just rely on the signal. See the major areas. See this pattern. If you see this pattern, then you can enter your trade without any hesitation if all your rules are met. That is why I send you these trades so that you learn and you see these entry patterns. And if you're still having a confusion entering the trade, you can always DM me to check if you're taking a valid entries or not. I'm always there for you to guide you. That is why I'm here. That is why I send you these trades so that you learn out of these trades and take these trades on your own as well. Now let me show you some natural gas trades we've been taking, and let me show you the condition we are currently getting in natural gas. So now let's start our analysis with nat gas, gold, crude oil, and I'm going to go with nat gas first. Now, so if you see here, we got a nice double bottom pattern So let me show you what I've said in my last video so that you can understand what I'm looking at for these entries. I'm expecting a push up from natural gas at least till 8.166, and then once of a target hit here, then come up on 4 hour time frame. Looking at 4 hour time frame, we might see push up and then push down, and we might see a double bottom condition here on 4 hour as well. Our take profit one has been hit, but you can take it till this point. And with that, we also got this divergence. A nice one. So as you can see, our target of 8.175 has been hit here. And the way you enter double bottom trades is once you have an engulfing pattern at the rejection area, that is your entry number one, most aggressive way to enter. The other way you enter double bottoms is at the break of neckline. Let's say if you missed this entry at this point, this is the break of the neckline, then this is your entry number two. Right here, that is enough to hit your target. Now, we also have a third type of entry, which is a retest of a neckline. Now, we already have a neckline here. Let me make it more prominent for you. Right here, what do we have? We have a neckline. And now we already have a retest of a neckline, not breaking and closing below. Now, let me take you back to the trades we have been taking from last few months. Not sure if you follow me at that time, but let me quickly show you what I mean by these entries and these pattern and how these pattern work in the most efficient way. So let's go back and see. Right here, we had a similar condition, a double bottom pattern. We have engulfing candle over entry number one, market pushed up from here. We're taking this trade on 9th of August. I still remember, if you want to check my previous video, there should be a title with a double bottom trade. And right here, we got this trade. And if you see, we had a double bottom, we have this engulfing candle, market pushed up. Now, the second thing we look at is the break of neckline. Where is the neckline? Right here, we have a neckline. What do we have? A break. You have a break, then you enter right here. So even if you have entered right here, keep your stop loss below the neckline, you have a huge target that has been hit. Now, let's move on to the entry number three. Entry number three is a retest of the neckline. Now, what do we have here? Let me clear this mess here. Right after the break, market pull back to this neckline. With that, we have engulfing pattern, swing low engulfing pattern, and that is also a perfect entry. If you entered here, keep your stop loss below and take your targets wherever you want to take it, even to till the next resistance. In that case, if you see, all our entries were valid. Our entry number one, our break of the neckline, and then the retest of the neckline. So there are a lot more rules into that which you're going to learn in my course, but I just want to show you as much as possible in my small video so that you can able to understand these pattern more efficiently. So this was one of the trade, double bottom trade, that reacted exactly according to the pattern. Now let me take you 6 months back. I uploaded this video 6 months ago, as you can see on the screenshot. If you want to look at this video, you can go back and check this video with the same video title. And what do you see here? We had a nice double bottom pattern. Now let's mark our neckline right here. Let's make it more prominent right here. Now what do we have here? Engulfing candle. Let me zoom this up so that you can able to see it more clearly. As you can see, engulfing candle, that is also a 382 and a pin bar. Our entry number one right here, that is enough to hit the targets. Now what is our entry number two, if you still remember? Our entry number two is right after the break of neckline. This is the break of the neckline. Here you entered, and if you see, the target has been hit easily. Now let me show you the entry number three. What is the entry number three? The market push up, it always, not always, it mostly come back to the neckline, the retest of the neckline with this double bottom pattern, and the opposite for the double tops. Right here, if you see, market push up, came back down, we had nice engulfing candle. That was your entry number three as well. Even if you see, market pushed up, came back down. We also got an entry here. And with that, you enter here. And if you see here, that was a massive, massive target if you would have managed your position right to the next level of resistance. So this is what I wanted to show you so that you guys can understand the pattern and how you can enter using these patterns. Now let's Now let's look at the present date. We took this double bottom entry. This was an entry. Market pushed up, hit our target, and then we had a break of neckline. Market pushed up, hit the target number two. Exactly the same. What do we have? Market pushed up, came back down, engulfing candle. So this is the entry number three, which is currently a valid entry. That would be your entry. And now the stop loss can be below this double bottom area. Or if you want to have a better risk to reward, keep your stop loss below the neckline. You can go 1.4 to 1 risk to reward ratio, and then you can manage your position till the next resistance. Right here, the next resistance is 8.454. This is a minor resistance. So just wanted to show you we are getting a same condition, and according to this condition, I'm seeing the market to push up from here. Now, like I said, on 4-hour time frame, let's say if the market won't push up from here, that doesn't mean the market will turn bearish. Just mark your rejection zones on 4-hour time frame. This is your rejection zone right here, and it is from 7.781 goes up to 7.886. So now this is your rejection zone. If the market come back down, hit this rejection zone on 4-hour time frame, and then we get nice engulfing pattern, then that will be your entry reason as well. And as you already know how to take double bottom entries, then you will have a very good idea once you see a break of neckline and whatever you left learned just a moment ago. So keep an eye here, keep both zones on your charts. Of course, the market won't run according to my analysis. It can push down as well, hit our stop loss, but technically, this is what I'm seeing. So do not just take my words on it. Do not just put every single money just because I've said that. This is just my opinion about the market, and this is how I trade myself. Personally, this is how I've tested my strategies, and I've already shown you how efficiently this pattern works. Now, if the market pushed down from here, you should have your stop loss for the worst case scenario. If the market reverses from here, it won't blow up your account. So at this point, net gas looks bullish to me unless it hit this level of resistance. Once it hit this level of resistance, we will check the entries accordingly for sell or buy trades. So I hope you got a value out of this video, out of this lesson. So make sure you hit a like button for me at this moment. I'm sure you have done that. So let's check gold next. Okay, right here. In my previous videos, I've been telling you guys do not say enter buy trades until we are broken above this level of resistance. As you can see, with this nice big engulfing candle, market is now pushing down. So again, it's still bearish. We can still see another fall from here unless and until we are completely broken and close above these two candles here. If you want to be less aggressive, just wait till the market break and close below 50 and 20 EMA and retest, and then take sell trades from here. This zone is 1716 goes up to 1728. This is my resistance area. Now I want to show you something here in the long term. In the long term, as you can see, we also have a double bottom pattern, and that can push the market up in long term. But if you are taking entries on lower time frame, you can expect some push down. That will be enough to take your sell targets if we have a sell condition. But if you see in long term, I've already explained you the double bottom entries. You already have a valid double bottom. You can see big engulfing candle here as well. So looking at this engulfing candle in the long term, we can see a massive push up from gold. But looking at the 4-hour time frame, if you're a day trader, then you can expect some push down like $5 to $10 push down before the market will continue with its move. So gold is bullish in long term, bearish in short term. So I hope you got the concept of it. Let's check crude oil. Awesome. We got a nice push out of crude oil. As per my last video, let me quickly show you that. Came back up with this nice engulfing candle, and looking at that, I'm expecting some push up from crude oil, at least $1.6 to $2 move up. And you can always manage your position once you take profit one is hit. So nice one. As expected, with this nice engulfing candle, we had a nice push up. Market stopped at our EMA, our favorite EMA, which is a 50 EMA. As you can see, we already had a nice $3 move. I was expecting $2 move, but we had some nice push up from it. Now we are below 50 EMA on 4-hour time frame. So that is why just wait and see if the market break above 50 EMA. If it breaks above 50 EMA, then there is a possible chance that market will push up from here. If it won't, then we can see a retest of this zone, and let's see if we are broken below this previous low, only then I will go for sell trades. So at this point, we might see a possible formation of double bottom as well. So keep an eye here, not entering crude oil at this point. I will see for the good reason to enter, which we already had, and we already took an entry out of it and made some profit out of it. So that's all for commodity market here. I hope you got a value out of this video, and I hope you have learned something out of it. So if you are new, do not forget to hit the subscribe button and join Money Markets family so that we can all trade together and we can all trade efficiently. I hope you have a wonderful weekend. I'll see you guys in the next video. Till then, take care.